What's up, stock compounders? Brad here. So I was just listening to a podcast on the value hive, okay? And it was about this guy who did a study the globe over for companies that return 10x in 10 years. It was very much along the lines of Chris Meyer's book, 100 Baggers, or Thomas Phelps' book, 100 to 1 in the stock market. But in this case, it was just trying to identify companies that returned 10x within the last decade, okay, within the last 10 years. And this kind of research is always fascinating to me. The two books I just showed you were really focused on US companies. But this study on Global Outperformers was public companies globally, okay? So it wasn't limited to the US, which I thought was a very fascinating twist. Personally, I really like to focus on companies in the US in my investment portfolio. But listening to this podcast, there was one thing that Dede Eyesan, who did this global study of 10 baggers, said that really kind of piqued my interest. And the thing he said in this podcast was, of these 10 baggers over the last decade globally, 82% were profitable 10 years ago, okay? At the beginning of this 10x run, 82% of the companies were already profitable, okay? So that was like, wow. Here in the US, we're at least I'm used to thinking about companies that generate that kind of performance as being more speculative, many of which are probably in the red in terms of earnings, at least at the beginning of these 10x runs. So it really got me wondering, of the 10 baggers in the US over the last 10 years, how many of those started out profitable? At least how many of those were profitable 10 years ago on this run to 10x? So I did a little study myself. I pulled up Ticker Terminal, which you guys, I can't recommend Ticker Terminal enough for running screens, for digging into the financials of individual companies, or even looking at what gurus, what super investors are buying and selling each quarter. If you guys haven't gotten on this platform yet, I have a link below. If you use that link, it really helps me and the channel. So I appreciate that, but this is really the only platform I pay for, okay, as a stock investor. So anyway, I ran a screen on Ticker Terminal. Okay, I'll show you guys how I set that screen up. Country, USA. I'm only looking for US companies for the purpose of today's research, today's video. I looked at the market cap, basically the current market cap, the last market cap, over 50 million. Now, what Dede did in his study is he was looking for a market cap over, I think, 400 or 500 million, okay? And I think Chris Meyer may have done something similar. And the idea is, if you have a 500 million market cap today, after a 10x run, it was probably about 50 million 10 years ago, right? That logic makes sense. And that way you're cutting out a lot of the riffraff, kind of below 50 million. But what I did, I wanted to include some of that riffraff, some of those nanocaps, just to see how many of those were also 10 baggers. So I cut it off at 50 million today. That's how I ran this screen. Industry is not one of capital markets. I don't want to deal with any ETFs or things like that. So I just removed that industry entirely. Stock price percent change. Over the last 10 years, I wanted a 900% or greater change in stock price, okay? Now, I'm not sure if my brain fully gets this, but I think if you have a 100% price change, right, it's a double, okay? So that would mean a 900% increase would be a 10x. So that's why I have 900% here. Dede mentions, 1,000% or more for a 10x. I think there's a slight discrepancy there. So anyway, running this screen, try to guess how many results came about. In the US, companies that are currently over 50 million market cap, how many generated 10x or greater returns in the last decade? There were 85, okay? Pretty manageable list of companies to kind of take a look at and dig into further. So again, the thing I really wanted to figure out, of these 85 companies, and there's actually 82 when I pulled up the spreadsheet, there were a few that had some really wonky kind of results. The price going back 5 years was zero, 5 to 10 years ago, so I excluded those. But I arrived at 82 companies, and I wanted to figure out how many of those were actually profitable 10 years ago. Does the US have a slightly different characteristic in that sense than what came out of these global outperformers? And it did. So let's take a look at this spreadsheet. First, I just want to plug Dede's research. If you go to his account on Twitter, go to this website here, jengaip.com. You can request a copy of this Global Outperformers, and he'll just email that to you. So again, if you're any kind of nerd like I am and you geek out over, trying to reverse engineer the characteristics of these 10 baggers, these 100 baggers, this is a pretty interesting study. 287 pages worth. So also great sleeping material if you really want to get into the weeds here. But here's the spreadsheet I compiled of these 82 US companies that 10x'd over the last 10 years. What I've done is I've highlighted different market cap sizes here. Okay, I broke it up by market cap. So you've got nanocaps, and I sorted this by market cap back at the start. Okay, at the beginning of 2013, what were the market caps of these companies? So that's how I sorted this. You've got nanocap, in this case between 2 million and 46 million. It's really 0 to 50 million is considered nanocap. The next section is microcap, between 50 million and 250 million. Then you've got small cap, 250 million to 2 billion. Mid cap, 2 billion to 10 billion. And finally, large cap, basically anything over 10 billion, starting market cap in the past decade. So I wanted to get a sense for, are there more 10 baggers over the last 10 years in any of these particular market cap baskets? Are there more 10 baggers in the nanocap space as compared to how many companies there are in the nanocap space? Okay, now that's key. Can't just be, are there more, in general. It has to be more relative to the opportunity set, to how many actual companies there are in those size baskets. So it was pretty interesting. What I found out, real quick, nanocaps, there were 31. Okay, 31 nanocaps, 17 microcaps, 21 small caps, 12 mid caps, and just 1 large cap. Okay. Now, this is where it got interesting. When I compared how many 10 baggers there were to how many companies there are of that size. Now, this is how many companies there are of this size currently. Ideally, I would have gone back 10 years and figured out, okay, how many companies were in the nanocap space in the US 10 years ago? That would have been the best. I don't know how to do that. I'm not able to do that on Ticker Terminal. So the second best thing I figured is, how many are there today? How many nanocaps are there today in the US, that aren't in the industry capital markets? And what I discovered is that whether you're fishing in nanocaps, microcaps, small caps, or mid caps, the percentage is the same, okay? About 1.2 to 1.3% of all of the opportunities in each of those spaces are going to turn out to be 10 baggers. At least they have over the last 10 years. So that was pretty interesting. To me, let me just grab a drink of water here. To me, what that tells me, again, this isn't perfect data, because I'm using, data from today versus data from 10 years ago on how many companies are in each of these baskets. But it was remarkably consistent, where it's about 1 in 80 companies, whether you're fishing in nanocaps, small caps, mid caps, microcaps, 1 in 80 of these companies is going to turn out to be a 10 bagger, okay? So that was instructive. I don't think I answered this question yet. How many of these companies, of these 82 companies 10 years ago, were profitable? So it was less than the 82% that was found in this Global Outperformers study. It was 2/3, okay? 2/3 of the companies in the US that have become 10 baggers over the last 10 years were profitable 10 years ago, okay? So again, you might think, all these high flyers, all these, companies that have done incredibly well over the last decade, most of them probably started unprofitable. No, 2/3 of them were profitable 10 years ago. So that's instructive as well. I wanted to dig a little bit deeper. Within the nanocap space, 14 of them were unprofitable, were losing money 10 years ago. Okay, that's 45% of the data set. 11 had an EV, enterprise value, to EBIT multiple less than 16, okay? And I think I've heard in the past, Buffett kind of looks for opportunities. He really likes to strike kind of below 16 enterprise value to EBIT. So that's, as a very broad brushstroke, I consider that cheap, kind of reasonably priced to cheap. Of course, different industries, you probably have to shift that number around a little bit. But broad strokes here, 6 of those were, over 16 EV to EBIT multiple. That's 19% of the data set. Now, if you go up in size, you go from 45% unprofitable to 35% unprofitable to 24%. So it's interesting, as you get bigger in size, you get fewer and fewer 10 baggers that started with negative earnings, okay? So that was another trend I noticed. So yeah, the big highlights here, 10 baggers are evenly distributed under 10 billion market cap, okay? Kind of equal opportunities regardless of which size ponds you're fishing in. 2/3 were profitable 10 years ago. 40% traded at less than 16 times EV to EBIT. Sorry guys, I guess I'm not used to making videos. My throat is having difficulties here. So, those are a couple things I wanted to look at. Size, EV to EBIT multiples 10 years ago. And the third step, the third thing I wanted to look at was, are there patterns within industries, right? Are there industries that are really rising to the top in this 10 bagger study? So what I did was I pulled out all of the companies here that had an EV to EBIT less than 16, okay? I'm a value investor. I really want to prioritize businesses that are cheap. So when I did that, when I pulled out all of the companies that had an EV to EBIT ratio 10 years ago below 16, you can see these are the companies. There are 33 companies. And I wanted to try to see, are there patterns, industries that are popping up multiple times. Electronic equipment, instruments and components popped up multiple times. Semiconductors and semiconductor equipment. Healthcare equipment and supplies. And a lot of these industries, you'll notice if you follow Funsmith and Terry Smith, are industries that he really likes to play in. I once looked at all of the Funsmith holdings and compiled all of the industries to try to see, where is Terry Smith shopping? Because he really likes to shop in industries that have had consistent high return on invested capital over time. And, these industries aren't shifting around in terms of return on invested capital, pretty consistent, where if you have an industry that tends to be higher on that metric, it stays that way. And a lot of these industries I'm seeing in this list are overlapping with companies or industries that Terry Smith likes to shop in. But what I also noticed from this list, there's a lot of different industries represented here. And that's very consistent with what Chris Meyer found in his book, 100 Baggers. So, that's kind of what I dug in here, guys. And I think any of these companies are well worth studying. Companies that were cheap 10 years ago and just rocked it, right? You could have identified them as cheap or reasonably priced 10 years ago, and they would have done incredibly well in the portfolio, right? 10 bagger, that's 26% annualized. So very strong returns there. And some of these companies, I've seen before doing research on 100 baggers. I put together, I think it was like 6 months ago now, a study of 1,000 baggers, which was pretty interesting. Expel ticked that box. Thought there was a Texas Pacific Land Corp, maybe ticked that box. I don't remember. Old Dominion Freight Line up there. I know that's one of Chris Meyer's. I don't think Chris Meyer owns that one, but that's definitely on his watch list. And notice also here, there's only one company from 10 years ago that was a large cap, that was over 10 billion in market cap. That's United Health Group. Okay. So obviously the entire, at least a year ago, the entire market was quite enamored with, large cap tech in the U.S., mega cap tech in the U.S. And, that's not necessarily the place to be hunting for these outperformers. Size, of course, Warren Buffett has said this many times, size is the enemy of high returns. So you can really see that in this study of 10 baggers in the U.S. over the last 10 years. Let's see if there's anything else, guys, that I wanted to share. I think that's it. Just that, as long as you're mid-cap or below, it's 10 baggers are kind of size agnostic. It seems like is what my research is telling me here. And you can buy cheap and still, have this incredible performance. You don't need to sacrifice, buying companies that are losing money every year to try to find these great returns. So just a few quick, powerful lessons from a day of research on my end on what's happened over the last decade in the U.S. So hopefully you guys appreciated this. I will share this spreadsheet in the description, so any of you can dig deeper on that, kind of parse it apart as you see fit. And be sure to give Dede a follow on Twitter. He's growing his tribe nicely, 2,900 followers. So help him out with that. And I think that's it. Oh, just give Brandon Balo a shout out. He runs the Value Hive podcast. He's somebody I follow very closely on Twitter as well. So Market Plunger on Twitter. Give him a follow as well. And with that, guys, I will leave you there. Until next time, take care.